So Keisha, let's move over to you in the United States, where you're looking at the S&P 500, and somebody has a question for you, but we'll ask that later as well. S&P 500 has jumped nearly 1%. This was last week,
That was,
Thursday.
yeah, it's back down today.
It's back down. All right, tell us what's going on. Just give us the
All
update.
right, so I guess the volatility, the up downs, the swings are really due to the debate going on right now about the U.S. debt ceiling. So as it currently stands with the U.S., there's a limit to how much the country can borrow. That limit was first implemented back in 1917, and over the years, it's been slowly increasing. The thing is that each time the US government comes really close to hitting that debt ceiling, we have this back and forth, this malaise period between the Democrats and the Republicans, because the Democrats believe that, debt is necessary to be able to pay for the social good, while the Republicans believe, well, it's evil and the country is being run very recklessly because there's so much debt going around. So each time there's that back and forth between, do we raise the ceiling again, or does the government start missing payments? We're talking about missing paying government employees, pensioners, because if the debt ceiling is hit, the US government cannot make those payments. So we're coming up to a deadline pretty soon, June 1st. And that's why we're seeing the volatility in the market based on where the discussion is going and the negotiations are going. It's creating a lot of swings. So that relates to LeVar's question as well. What happened today? Well, we had discussions ongoing today around the debt ceiling that didn't really go too well. So because of that now, some amount of panic, persons start dumping stocks a little bit, because the thinking is, well, if the US breaches this debt limit, what does that mean? If the US government can't pay its bills, that's massive, right? And so that's what we're seeing now, creating that volatility. All in all, though, what we'll likely see is an extension, because we've been here before many a time. So we'll likely just see an extension in the discussions going into June, because into June, we're going to have quarterly tax payments coming in. So at that time now, we could see, okay, the government will be able to make those June payments to pensioners and to pay the employees.
So is the US market more volatile than Jamaica's market, would you say?
I would say this year, not so much. Last year, 2022, for sure, the US was swinging all over the place. This year, it's really the Jamaican market, from what I've seen, that's been really underperforming. It's down a lot year to date, as Leo was mentioning, right? So, but still, there are nuggets in everything, right? So the broad market on a whole, things may be happening, but it's always possible to find, that one or two little gem inside everything.
So Leo gave us one of them tonight, Dolphin Cove. What was the thing? What happened with the Pentagon? So that's what LeVar was asking.
Yeah, so it's discussions at the government level
regarding the Pentagon news. What's the Pentagon news?
So it's Biden speaking with the leader of the opposition around the debt ceiling. They're having negotiations around that because we need that limit raised again. It's right now 31.4 trillion US dollars. That needs to be increased so that the US government can make their payments in June.
Okay, Pablo says the debt. Don't call her lady, Pablo. I don't like how you started it. The debt ceiling debate has little impact on the stock market. It's inflation and interest rates, as well as the prospect of a recession. So
the debt, it is weighing on the stock market. It is, Pablo. It is. Inflation and interest rates too are playing some impact. The thing, however, is that we're having this, everything culminating together, and it's creating more volatility. So yes, inflation was always there. Higher interest rates was always there. But when you add on now discussions around the US breaching the debt ceiling, that now adds to the volatility, because back in 2011, which was the last time we were this close to the debt ceiling not being raised, the US credit, their overall debt level was downgraded, because there was a lot of discussions about, all right, is the US really going to again raise their debt ceiling? So it does add to the volatility. It was already rocky. It's now even more, right? So that's what we're seeing.
All right, and then last comment comes from Marl, who says the U.S. is broke. No need to sugarcoat it. Is
Yeah.
that true?
Yeah, so because they keep going in debt, the government needs debt. And like most countries, debt is just the way most countries and persons, debt has become the new norm, right? Which is a whole entire episode.
Having debt doesn't mean you're broke, though.
Um, broke meaning we can't pay the bills because of this limit.
Mm.
There's no cash available. The country has to issue additional debt to be able to make these payments. There's no cash ready. So in that sense, yes, broke.
I tell you who ain't broke. Jermaine, who's saying good morning from China. China has entered the chat.
Yeah, not broke over there for sure.
Morning, Jermaine. All right, and then we have Sheldon saying, "Will the U.S. ever be broke?"
Yeah.
Okay.
I
All
mean,
right.
any government really can keep printing, but because of this debt limit,
Which
yeah.
is a whole other conversation, because that's what they did during the pandemic, which led to higher inflation, which, oh, okay, let's not go
Yes.
down that rabbit hole
Yes.
tonight, because we'll be here all night talking about that. But thanks for the updates, Keisha. Thank you so much, Leo.